Welcome to another episode of Scouting for Growth, the podcast that amplifies new voices, challenges the status quo, and sets new trends in finance, insurance, and health among the few. Today, we have a truly special guest with us, Ari Katz, the managing partner at BEA Ventures and co-founder of Bolt, now known as bolttech, which completely transformed into the powerhouse it is today. Indeed, bolttech is an insurtech like no other. With an international footprint spanning 3 continents, the bolttech team brings together people around the world with more ways to protect the things they value. They quote annually $50 billion in premium value. Ari is no ordinary entrepreneur, though. With 30 years of experience, he is a software industry titan whose ventures have repeatedly shaken up the insurance sector. Ari now leads BEA Ventures, aiming at rapidly scaling startups to penetrate or create new markets. BEA Ventures offer what they call a transformative investment journey, a fascinating multi-step approach that integrates an extensive global network and in-depth industry knowledge to scale companies effectively. So today, we will dive deep into a variety of crucial topics. First, strategic vision and market positioning. Then we'll go into startup acceleration and value creation. I wanted to talk about data, and technology that is going to affect us so much in 2024. Then we look into future outlook for 2024 and what collaborations mean, and much more. You are not going to want to miss this conversation, actually. Yes, it promises to be a masterclass in insights and strategies that could be the catalyst you just need. So let's get into it. Hi, Ari. Thank you so much for joining me on Scouting for Growth today.
Hi, great being here.
So, Ari, first of all, we always ask one question before going into the meat of the discussion. So it would be lovely if you could actually help my listener to understand who you are, what you do, where you're coming from, where you are going.
Okay, so my name is Ari Katz. I'm a co-founder for Bolt, which has later become bolttech. Been working for over 30 years in founding and managing companies, software companies, with several successful exits. And nowadays, I'm in the process of establishing BEA Ventures, which is a new venture fund that we are establishing together with bolttech. BEA Ventures is bolttech, Eric and Ari, with the idea to leverage what we have from bolttech and our experience so far to try and help new startups and companies.
That's super cool. So I would love to go into strategic vision and market positioning for BEA Ventures, Ari. So why did BEA Venture come to bear? Why did you create BEA right now, right at this moment? Because I've seen when we talked over the past 3 to 4 months, I heard about the launch and what market gaps and opportunities you are trying to alleviate opportunity you are trying to grab, please.
So for the past, I would say, year and a half within bolttech, we've moved from management of operations into looking at external companies with the idea of there's been a lot of investment going into the fintech and insurtech space in the past 2-3 years. On the one side, on the other hand, from bolttech perspective, there is limited resources that are working on the roadmap and everything that's needed for its operation. And the idea was, let's see what's available externally and see what we can leverage both from a bolttech perspective, but also for the company's perspective, help them get to the right distribution, to the right places, and in a win-win environment. What we've seen is that many of those companies are I would say, young and not mature enough to be able to get into those places. And we've seen over 150 companies. And what we saw is that they need more guidance. They need some funding. This is typically like a seed A type of funding, and they need more handholding, improve their product market fit, et cetera, et cetera. And we said, okay, this is something that should be done externally. And that's where the thought of creating an external VC came into play.
That's super cool. And, some of the challenges you have actually highlighted echo very much with me, because when I set up Alchemy Crew Ventures, it was all about helping the startups. But for me, helping the startup work with corporate. So my focus has always been around B2B. And on the corporate side is more around, industrializing, democratizing, helping the corporate really understand the method of collaboration and partnership. And, automate this, like make this a little bit more of a system internally. So building blueprint with them, but also then identifying the right partner they could collaborate with. What I've seen though, Ari, is past year, we are in 2023, 2021 and 2022 were absolutely amazing for fintechs, right? We had billion invested. InsurTech, I think, was around 18 billion. Last year, 2022, it went down to 9 billion. And this year it's also going down, and we estimate to 4 billion. So this year is really tough for startups, young ventures, to raise funding. We have helped a few do so, but the process and the length of time, it's much longer, and you have to talk to many more investors or key small frogs to get to the outcome. So my next question to you, Ari, is despite high inflation, high interest rate, escalating cost of capital, and that's why I think investors have choice today. They can pick and choose and look at really cool business models and decide a yes or no. What unique angle do you think your team is going to bring to the market, which is missing today?
So I think the unique angle that we provide is has several steps. So one around identify. So identify the companies that we want to look at. Using the bolttech distribution, we see companies that come to us, or we see need based on clients and prospects. So that's, I would say, the first area is being exposed to what's needed and what companies. So we call it identify, right? That's the first part. I think the second part, which is also very, very important, is the validate. So typical VC, when they look at the company, how do you validate that their idea or their solution actually has some market acceptance, or what to do with it? And from us, the thought is, and thought and action, basically, that we already did with a few companies, is either small POCs or validate it with customers, with prospects, with partners that we have hundreds of them, that we can tap into the right one and say, is this something that's of interest to you? And then we can take it to the next step. And last but not least, I think most of the expenses, when you talk about the investments, it's much harder to get money. A lot of the funds go to product market fit. Yeah. So you have, I would say, almost all of the companies that I've talked to at some point have done several iterations. It's rare to see a company that hit the right product market fit just from the start, and this is expensive and it's time consuming, which are of course combined. So if we are able to help with the product market fit, shorten the time to get to a good product market fit, I think that's something that's very important for those companies that are striving for cash and not spend it on a product that doesn't fit what they need.
Absolutely. It's so critical to get that product market fit right. And what I've seen, often when I talk to ventures, I make the assumption, because I've done acceleration program, that most of them have done an acceleration program. So I'm always very surprised when they don't really understand what a business model canvas on a value proposition canvas is, or even the lean methodology, right? Or some of the tools from Alex Alston-Water around Strategizer. Because if we get those right, we can understand who the customer is, we align the features to the customer need, and then we validate the business case and that somebody wants to buy the product, right? Whether it's a big company or a consumer, then we have a much more valid product market fit. And this should take, 12 weeks, right? Not more than 3 months. And we often see startups where it takes much longer. So, Harry, what are the trends? We are moving into 2024. What are the tech trends you are going to look for, the ventures you are going to help go into your distribution channel, and this relationship you have built over the past 30 years with insurance company and else?
So I think we are mostly looking, again, it's not exclusive, but we're mostly looking at areas where we have some synergy with bolttech offering or distribution or capabilities, so we can actually enjoy that from both sides. And the areas we've seen that have a lot of traction and potential is around, one is around data and insights and everything around those capabilities, where there are a lot of new companies, not necessarily all of them in the insurance space, but that they are able to create data and insights, and seeing how we embed that into an offering together with bolttech and accessing the carriers through the platform. So that's one area, but there are many companies within that area that fit. Another area that we see as something that with a good potential is, I would say, personal cyber. We are very large in device protection distribution in bolttech. We are device protection in 35 countries around the globe. And cyber protection, similar to device protection, there is a lot of synergies between the two. When you think about, I'm protecting my device, or I'm protecting the virtual space of my device and everything around that. So there's more and more awareness to that type of product. So that's another area that we see a need. And some more, I think, around companies that provide capabilities to insurance companies that we can leverage. So the two areas I would say is capabilities external to the insurance companies, whether it's data, solutions, et cetera, that we have distribution for. And the second is things that we can easily bundle within the device protection, because we have a lot of storefronts, not ours, but to our third parties, that we can leverage to sell products. So those are the two main areas that we are.
Yeah, it's interesting because knowing bolttech, which grew fantastically, I think the last number I've seen is you're actually handling something like 44 billion of premium transaction GWP across your platform. What is interesting is the platform is really about embedded insurance and enabling the distribution to get access to the insurance offerings that is the most critical for their customers. And so when we look at the way the world is moving, we have an aspect around data protection. Me as maybe a macro influencer, I need also those protection when I use my Instagram, my LinkedIn, my Twitter, right? So it's a device I'm using, but it's also my reputation that I need to protect. So an insurance like this is actually critical in my life. But it's also,
I think when you say insurance, it's what you care about, and I won't speak for you, but it's not just the insurance, it's the capability. What you want is for someone to help you retrieve it, so you have someone that you can talk to, or that will help you guide you what's the next steps. So it's not just the money that you lost in those whatever 2 weeks that it was down. It's more important for you to have the safety and the comfort to have someone help you, or first of all protect you beforehand to try to prevent it, but also someone help you along the way, versus the actual cash that you would get as a compensation. So
absolutely, it's the safety, the peace of mind. You're absolutely right. The peace of mind is actually the recovery. I heard stories of major. That's why I said I'm a micro influencer, but I've seen stories of major influencers where their Instagram account got hacked, and then they make money just through Instagram. And so they lost a source of income for 30 days, 60 days, 90 days. And that should never happen, right? So that's why the value of the work you are doing is critical. And also identifying, therefore, the new players, the new angles those players can take to augment the bolttech value chain and distribution framework, because we want seamless. We want no touch point. We want one-click button efficiency services nowadays. On the other side, what I find fascinating, Ari, is your angle around data and analysis. We know generative AI is here, so that is an adjacency for insurance. So how do we identify the emerging risk and the technology which could enable, but also how can we protect ourselves from it? Absolutely fascinating and needed as well. But so when I look at startup, from an acceleration and value creation viewpoint, you already mentioned the critical part of the value chain which is missing using the BEA Venture framework is product market fit. So what are, for you, when you look at those ventures you are trying to attract and help them be more successful with your client base, your network of distributions, what are the chief obstacles they typically experience, beyond the fact that their product market fit is too long? Can you share a bit more with us on that front, please?
So yeah, I see startups I'm not saying all, there are cases where people tend to develop things, I would say, quote unquote, in the lab. So you have the developers, the product, and they work and they think that's the right solution, but they don't have enough client and prospects feedback. And therefore you get solutions that may work great, but are not necessarily what the client needs. So that's something that still happens. I know it sounds weird, but it happens. And there are cases that's, I would say, more common when you develop something and then you have a big client, or at least at an early stage, it's a big client, and you develop it tailored to that client. And then when you move to the next client, you see that what you developed doesn't exactly fit the next client, because you developed as more as a project versus a product, which is what you are aiming to do in most cases. Again, there are companies that are project companies, but many of those startups are looking to create a product. And then if it becomes too specific to one client, then it's hard to make it scalable. So that's another thing that we see. Another thing is around the actual business model. So the product is great, you have all the features, but you're trying to sell it in a way that doesn't work. And it might be because people, let's say, data. So there are cases where people don't want to buy data because they've been offered data so many times, they paid for the data, but they didn't see any returns because 1,000 of different reasons, right? And there might be cases where you can offer it not as a subscription, but something like a profit sharing. I would use the data to sell those products, and we would share the additional profits. So things that are not trying to change what you offer, even though the product is the same. So the offering itself might change, even though you've developed a set of capabilities, but it's not necessarily how you should sell it.
Yeah, you actually already highlighted your years of experience in the sector. And you also highlighted already that bolttech, Ari coming together within BEA Ventures to actually offer something different within our industry and beyond, actually, when you look at the adjacency you serve. Ari, can you tell us a little bit more around the knowledge? We are in a knowledge economy today. It's all about the experience and expertise we have accumulated for years. Can you tell us a little bit more around that knowledge, that expertise that Ari and Eric and yourself, Ari, can bring to those ventures to help them scale a bit better, and maybe think in terms of portfolio as well, as I guess you're going to build a really interesting portfolio during the next few years?
So first, as you said, we want to help from our experience on the battle scars we've had in those years. So trying to prevent, if possible, mistakes that we've done in the past, and we made a lot of mistakes, and help those companies try not to do them. So that's, I would say, one. The second is the capability of actual leveraging client access and leveraging prospect access, the market access, to validate it not just by us, by the actual clients. I think that's key, right? You might have one level of experience, but if you manage to get and you ask the managers within bolttech, you ask sometimes prospects and clients if there's something that they want, market research, all those things can help definitely shape and scale those portfolio companies.
That's great. You already mentioned one thing which is core to my thesis, and an area I'm going to focus extremely next year in 2024, Harry, which is data and technology. The past year, since the launch of ChatGPT in November 22, even though generative AI didn't start then, I've been playing with technology. I've been analyzing players, tools for the partners I work with, mostly insurance companies. When you look at data and technology, how do we make data more actionable today? What have been your lesson learned working with bolttech? And from a technology evaluation viewpoint, how do we assess how technology is going to disrupt us in the future? Because it's moving super fast now, right? It's overwhelming, the change coming to us, and keeping aware of all the bots and bolts actually that we need to pay attention to be successful today. Tell us.
So I think two things. One, on data, when we talk about that, we are focusing on insurance, but data is global, right? It is all kinds of companies that produce different sets of data. Some of them don't even think of insurance, but they might be relevant for insurance, which is something that we are looking at. So definitely there is an area there that maybe this data hasn't been used for insurance so far for different reasons, and maybe there is a fit. So that's one area. I think if you look at the insurance side, insurance is a data business. So we talk about insurance. Those companies have been gathering data forever. That's their business. They gather the data, they analyze the data, they learn from the data, you do the underwriting, you do that. So everything is based on data. So it is definitely a data-oriented business. And so a company that's successful is a company that managed or is managing to leverage their data and or others' data and do proper underwriting, proper pricing, et cetera, and be successful, right? So that's, I would say, quote, maybe a given, right? You need to be able to leverage data in order to succeed in the insurance place. What we are seeing, since there are all kinds of data companies that not necessarily, as we talked about, smaller companies, insurance companies, different data sets, new capabilities, AI. So there's a lot of things going on in the data business on the one side, and you have the carriers that are trying to adapt into those ongoing and new changes and new capabilities. What we are looking to do, again, this is more for things that we're trying to build, is more a capability where we can aggregate different data companies, different data capabilities, whether it's different insights, whether it's AI models, all kinds of capabilities into one place where we can enable the carriers that are on our platform, we already work with. For example, in the US, we have over 150 carriers that we are connected to and work with to leverage this through the exchange. So we can say, okay, I want to only get this and this and this, and we, within the exchange, because it's also rules-based, decide, okay, this is these types of risk you won't get, or this data we can add into the transaction that you get. So all kinds of things that has to do with data and insights, but not necessarily without the carrier needing to do all the work or any work on their end, mostly on the business side. This is what we want. This is what we like to write. This is the type of information that we think is important, and without them needing to do all the integration and the analysis and gather the data and do the underwriting, et cetera, which is a very lengthy process. In some cases, they don't even know how to receive this type of data, right? It's maybe new data attributes that they don't have in their systems.
Yeah. So that's where I was thinking about how the bolts fit together, right? It's where bolttech power comes into play by leveraging an exchange, a platform, a system which has been built over the past few years to enable, through distribution, the insurers to get access to where they are weakness, right? You mentioned data as a great example. If we can enrich that data, and I've seen some amazing work done by Plank recently, and I'm thinking, imagine if Plank was, able to push some of their amazing new generative AI, they can actually provide a commercial line insurer to evaluate what is a good risk, what is a better risk, and what is the right price based on the right data, which is now available through transparent, explainable, and trustworthy generative AI. That could be an interesting proposition, because then they can close the deal much faster. Looking to the future now, Ari, 2024, I already mentioned the big number, and I so much look forward to sharing this before the new year starts. Given the volatility experienced in 2023, where is the money going to be in tech and insurance? I know you already shared with us your trends and where you want to focus. Is there other things we need to pay attention to in 2024?
I think one is again around data. That's for sure is growing, and more capabilities and more companies and AI, which is definitely there, and different capabilities, being able to do more tailored insurance.
Yeah.
Leveraging the data. So that's something that's evolving. And another area, which is not related to data this time, is more around ecosystems. So if you look at what's happening in Asia, you see a lot of big ecosystems that insurance is part of them. When you look at in the US and in Europe, it's less so. In the US, you have the big brands, the Geico, Progressive, State Farms of the world. And you don't really have an ecosystem that's selling insurance efficiently.
Yeah.
And if you look at Asia, you have the brands which are ecosystems, the WhatsApps of Asia that do have distribution and are selling insurance as part of their distribution. So I think the ecosystems and the digital platforms that actually enable those ecosystems is something that we will see growing more in 2024 in the US. In Asia, it takes time, but it is a place where you can actually embed insurance, and it's in the right place in many cases. When you do something that has the connotation for the transaction you're doing, which is not insurance, and you offer insurance in an embedded fashion that's seamless, I think that's where you would see more and more insurance distribution going to.
That's cool. You mentioned the word collaboration, and I love the fact that you also highlighted the difference between the three different main markets we are operating and working in: United States, Europe, and Asia. I always wondered, because I'm a collaborative person, I love working with ecosystem. That's why I work with insurers and startups. For me, it's all rooted in partnership, collaboration, partnership extensions. And I've seen great company, for example, like Wacom, doing a great work at it in Europe. But as you said, it's less prevalent in the United States. It feels much more competitive, actually. Mm-hmm. So do you think market like Europe and United States will change? Do you think that they will learn why, adding 1 + 1 can equal 10? What has been your experience looking at some of the change, lesson we've learned us in Europe from Asia? Do you see that moving to United States as well?
So I think, again, from what I see things moving both ways. I think that there are actual policies, and the insurance in the US is rather sophisticated and in Europe, from a underwriting perspective, less so in Asia. Mm-hmm. And the distribution, I would say, is more sophisticated in Asia because of the ecosystem versus the US, which is more traditional, right? Yeah. You have direct and you have agents, but you have less of an ecosystem where it's in the right place when it makes sense for you to offer that insurance. I think that's something that can be and will be improved in the US. So there is learnings on both sides from what I see.
Yeah, fascinating. So, Harry, if somebody listening to this discussion wanted to reach out to you, what should they do?
What should they do? Just email me or LinkedIn or whatever. Yeah.
Perfect. Thank you. And any last few words of wisdom and empowerment for the startup, for the corporate, for the collaborators which are there?
I don't know if last word. I think one thing that we did mention when you talk about collaboration just now, thinking a few years ago, it was the incumbent versus the disruptors, right? Yeah. It's who will prevail, right? You have new companies coming into play, and they aim to to be the leaders in the insurance. So we see that this is something that didn't happen, right? The money is still with the incumbents. They have the big checks. They have a lot of capital.
Yes.
But the opportunity didn't go away. The opportunity is more with the enablers, right? You need to be able to collaborate, which is the big challenge with the insurance companies. They have different culture, different mentality, different pace. It's hard to do this type of, right? You have young entrepreneurs that are trying to work with someone that's more been there for years and doing the same thing. So it's hard to make those things work. But I think definitely this is an area that once this is meshes and works well, it's improving, right? It's definitely improving year over year. And I think this is where the potential is, right? They have the big bodies of the companies that have the cash, the history, the client base, the distribution, but they don't have the innovation and the tech on the other side. I think combining the two is the future, managing for the two to work together. I think that's the way it should be, and will help this industry.
Amazing word of wisdom, Ari. When I think about big players, they have the money, they have the distribution, they have been here for some 335 years. But on the other side, you have the young players who have the innovation, they have the nimbleness, the ability to move fast, the chaos theory, the ability to use technology to build new business model. And being able to combine the two can actually be revolutionary. When I talk to insurers, just in the past few days, those are some of the lessons learned they've shared with me. The ability to collaborate with startups, have them change their internal DNA, their internal mindset, and realize they don't need always 1 year to put a new product together or to the market. It can actually happen in just a few months. So Ari, I wanted to thank you so much for joining me on Scouting for Growth. And I look forward to continuing the conversation and seeing you in the new year. Bye.
Bye-bye. Happy New Year.
Happy New Year. If you like this podcast, subscribe now, share with your friends, and if you enjoyed it, please give it a 5-star review. Also, if you want to cover any specific subject with me, contact me on Instagram under Sabine VdL Officials or LinkedIn under Sabine VdL. Thank you.